Good afternoon, everyone. I'm Sarah Foster from the CEBU Training Committee and an economy reporter at Bankrate. On behalf of CEBU, I'd like to extend a warm welcome to everyone who's joining us for this month's training on covering the jobs report. You're in for a great panel today, no matter how familiar you are with the data. Whether you're someone who can't sleep out of excitement on the Thursday night before the numbers come out, or are only briefly glancing at them to get your Friday started. Our moderator today is Stacey Vanek-Smith, Global Economics Correspondent at NPR and a member of CEBU's Board of Governors. And joining us as panelists today are Sarah Cheney-Cambon, reporter at the Wall Street Journal, Reed Pickert, U.S. economy reporter at Bloomberg, and Neela Richardson, chief economist at ADP. If you have any questions for our panelists today, I'd encourage you to put them in the Zoom chat. And with that, I'll hand it over to you, Stacey.
Yes, thank you. I am very excited to be here. And I think we all are because, obviously we all deal with lots of data about the economy. And I feel like a lot of it will make people in our lives, other people in our lives, maybe their faces glaze over a little bit. People just don't get as excited about the CPI or the Fed minutes as I feel they should. But jobs is something that I think everybody understands. I think it's probably the number that most people know about the economy. It's probably the measure, and this is among economists too. I would say among the general public and economists, jobs numbers are just crucial, and they drop every month at 8:30, usually around the first Friday of the month. And you've just got millions of people refreshing their web pages, waiting for this data to come out and poised to write articles and everything. So before I get started, I was hoping to jump into jobs data, more serious part. I was hoping if the panelists wouldn't mind talking a little bit about if they have a jobs day ritual, because it's such an intense day. Often people are writing on very intense deadlines, you've got to get it out by whatever it is, 8:35. Everybody's kind of competing. These are big numbers, often big surprises. So I would love to hear, if you wouldn't mind, just talking a little bit about your jobs day rituals. Neela, maybe we could start with you. If you have a little jobs day ritual that you like.
Hi, Stacey. Great to be with you and with this audience. Look, I'm not a reporter. I'm an economist. So my ritual does not look nearly as hectic as yours. My jobs week actually starts earlier. I work for ADP. We're a payroll company. We pay about 25 million workers around the country. And we put out a jobs number on Wednesday prior to the BLS report. And so we've started already thinking this through. But on Friday, I'm not writing articles. I'm actually listening to the report, but also contributing comments on the numbers themselves. So I get a chance to make my coffee, watch the 8:30 drop, refresh a couple of times, and read it thoroughly without having to write it most of the time, except sometimes when I'm on live TV. That's a different story. The numbers drop, and then the response is in real time. So there are two different, experiences, one that's more laid back, one where my reactions are caught on camera in real time.
Sarah, what about you? Do you have any special jobs morning rituals?
Yes, so I would say that basically most days I can kind of wake up when I want to. I'm a remote worker now, but on jobs day, and this has stuck even since when I first started covering the jobs report in 2018, we would go to the Labor Department and cover it. And so you had to be there at 7 a.m. So I'd be waking up at 5:30 a.m. and, your body clock is but that has kind of stuck, even since we've moved to getting the report online. My body just definitely gets up easily 20-30 minutes before I otherwise would, because the idea of just missing this report is so terrifying. And so it kind of starts with that. And then I would say that I have learned over the years that it is never good to be hangry at 10 a.m. when you're updating the jobs report story. So I definitely tried to like eat some peanut butter, just something that's like more filling for breakfast. And then I would probably about like 15 minutes before the report actually drops, I download some spreadsheets, mainly payrolls data, unemployment rate, wages, just so that I can quickly update those, see if there are any like records or anything like that.
And Reed, what about you?
Like Sarah, I also remember the days where we'd go to, the small windowless room in in the labor department. And just so people are aware, so we used to, for all economic releases produced by the Bureau of Labor Statistics and the BEA, we used to get them early as journalists. So you'd go into this small room and they'd give you a paper copy so that you basically had a moment to think through it. But obviously the pandemic made it so that we couldn't all be in a small room together. So that's when it shifted to this live release, which has absolutely changed the way that I cover and look at these numbers as well. But in terms of pre-jobs day rituals, I, like Sarah, wake up a little bit earlier than usual. I bike into the office. We actually have a little kind of bet. We do it for a bag of money, and the bag of money is some shredded dollar bills from the Fed that they give you when you go to visit. And I send my bet for the jobs day number, and then I basically make sure that I've eaten, I have a full coffee, a full water, and an empty bladder, and buckle in for a couple hours of unmoving time at my desk.
Yes, I remember. I never got to see the windowless room, but it is interesting that all the data that we all get it all at the same time now is kind of interesting. There's no more of that like little window of advance. I'm curious to know if you guys, because this data has been so kind of fundamental. I feel like people always watch this data very closely, but especially in the last few years, I think it's just been such a huge part of the story of the pandemic and the recovery and inflation and interest rates and all of it. I'm curious if you are looking at different parts of this report, because I think, there's a lot of information in this report. We all see the headline numbers, but I wonder if there's a part of it that you pay special focus to or special attention to, maybe always have, or maybe changed recently.
Maybe I'll jump in with a quick start. I tend to think of the jobs numbers, the number of jobs created, as the portion of any sport that ends up in the highlight reel. Like that is like the big play. It's the touchdown. It's the slam dunk. It's whatever your sport of choice. That's it. But everybody who's a sports fan knows that there are a lot of different plays, a lot of defense that goes on to that headline moment. And so it really depends on where we are in the recovery. For a while, I was really focused on labor force participation, because that was such an issue. We didn't see any budging in that number heading out of the pandemic. It was really a slow go getting workers back into the labor market. That's largely recovered, not perfectly, but largely. And so there's always this shift. I look at whether it's the unemployment rate is broad-based. Are African Americans seeing higher unemployment? Yes, than the averages. That's a big deal. Women, for example, so that data can shift. The establishment survey, looking at different industries. We've seen leisure and hospitality really be the stalwart of this labor market recovery. If it wasn't for happy hour, we would still be in the doldrums when it comes to the jobs market, because it's all this restaurant and bars hiring. So I think different parts of the labor market, earnings, big deal for inflation, can tell a different story. And it's really just putting it all together. And this is where Reed and Sarah and yourself do so masterfully, is like, what is the story of this month's labor market? It's not just about the highlight reel. You can lose a game and have a perfect slam dunk. What is it about this particular labor market that's compelling to a reader?
I really like analogy of jobs data with like a touchdown. I think we need more of that to bring data to life. But sorry, Reed, you were saying.
I was just going to jump in. I totally agree with Nina in terms of where we are in the recovery. In any given month, there's, a different story. I think one good place to start in any given month is, Neela mentioned the establishment survey. And it's important to, when you're thinking about the jobs report, that it's based of two surveys. There's a survey of households, and then there's a survey of businesses. And so when you think about the survey of households, that's where you get the statistics like the unemployment rate or the participation rate. And then the survey of businesses is where you get the statistics like the payrolls figure and wage data and the average hours worked in a week. And, usually those two surveys tell the same story, but sometimes they don't tell the same story, and that can be really complicated. So that's a good place to start in terms of trying to figure out what the story of that month was. But in terms of now that everyone is so focused on looking for signs that the really strong labor market that we have might be starting to weaken, or looking for any potential signs of that. Some good ones that I like to look at are, one, that hours worked measure. And you can see that the summary tables are awesome for anyone who's following along. They are your best friend on the BLS website. But you can see that on the hours worked, the idea of watching that is that businesses tend to cut hours before they cut people, especially when they've worked so hard to attract and retain talent in the kind of labor shortage environment that we've heard so much about over these past few years. So that's one thing I watch closely. I like the part-time for economic reasons line as well. And the idea of that is that, someone may be working a part-time job even though they want a full-time job. So, the surveyor might have asked them, okay, do you work part-time or full-time? And they say part-time. And when they ask that question of why, the answer to the why is something like, my employer cut hours due to due to less demand, or I couldn't find a full-time job. Those weren't available. And then the last thing I'd flag is the duration of unemployment. So we've seen a lot of headlines in terms of, job cuts at tech companies and financial firms. And, one thing when we think about the perspective of how we should view those job losses and job cuts in the broader picture of the strength of the labor market is how fast people who are getting laid off are finding new jobs. And so one way to look at that is when you look at the duration of unemployment, you can see, okay, are most people concentrated in the shortest time frame, so they're finding jobs quite quickly, or are we seeing more people move to these longer periods of unemployment? And that suggests that people aren't finding jobs very quickly, and is a very concerning sign.
And Sarah, what about you? Is there anything that you look for normally or have been looking at lately within the report?
I think lately I've been looking at the metrics that Reed and Neela mentioned, but also really zeroing in on specific industries. I think, one of the big questions right now, or probably the big question, is like, the Fed has been raising interest rates. When is that actually going to significantly slow the economy and the labor market? And so I like to look at industries that are very sensitive to interest rate increases. So we think about construction as being one of those, manufacturing. So these like goods producing sectors, and they've generally been doing pretty well. So it's been kind of one of the jobs economic surprises recently. And then on the other side of that, we have seen, not the other side of it, but just like kind of when thinking more about this industry breakout, a question that I always have is like, okay, what is driving the payrolls growth, the broad job growth? Is it one or two specific industries, or is it broad-based? And we have seen that leisure and hospitality and healthcare in particular have been really driving these job gains in recent months. And so that's been kind of just helpful for kind of figuring out, well, what's going on in the economy. You can kind of dig into these sectors and figure it out.
I would like to go back to something that Reed mentioned about the two reports that make up jobs data, because it does end up with some confusing situations like, oh, the US economy added 400,000 jobs and unemployment went up. In those cases, because it is very confusing, is there a report that is there a number you tend to pay more attention to, and why? Or what do you look at when the numbers don't tell a cohesive or coherent story? Sorry.
I can jump on this
Sure,
one.
sure. Yes, anybody jump in.
So in terms of when they don't tell a cohesive story, I think that's really important as kind of the writer of the story to flag for people, because I think, like a lot of economic statistics, you can often cherry pick what you want, and I think that's even more evident in times when the surveys tell different stories. But I think, I tend to lean a little bit more towards payrolls in terms of reliability, just because it doesn't jump around as much. The two tend to converge over time, but in any given month, I might lean towards the payrolls, what they're showing. But I think that brings up a really good point about this data more generally, and that it can be volatile from month to month, and it's subject to revision. Kind of whole storylines that you might have reported on one month, the next month might totally erase or reverse or change. And that is, really why when you're reporting out this and talking about these things, yes, you should look for the sizes and scopes, you should look for the big moves, but ultimately what you really do want to be looking at is the trend and what trends you're seeing, because you can count on those a lot more reliably than any kind of 1 month move.
Right. And sometimes the revisions are enormous. Does someone want to jump in and kind of explain how you look at the revisions or deal with them? Because sometimes the story of a month will be completely different when the new numbers come in.
Yeah, if I could just follow up with Reed's point, and I'll speak a little bit about the revisions, because one clear difference between the household and the establishment survey, other than one's establishments, one's people, is that the people survey includes self-employed workers. So when I look at differences, first of all, Reed's point is very well acknowledged that we really shouldn't expect them to be the same. They're two different surveys asking two different questions, but they should trend similarly. But what I look at when they diverge in any particular month is why, and that reason is probably not just about the month itself. It's the fact that there was a lot of new business formation over the last couple of years coming out of the pandemic. People started businesses. It was a record amount. I think it was like 400,000 a month for some period of time. And so people were reporting really strong self-employment numbers. So there are reasons why they would differ. That makes sense. And so we should be really cognizant of that context when looking at any particular series. But that brings you to the revisions, because there are, like any macro government data, they take more than one bite at the apple. Government data is always revised as new information comes in. So you think of that first Friday job release where Reed and Sarah are not going to the bathroom for like hours because they have to get things out. That's like the first revision, the first version of the data. There's two more. And so those revisions come in as more establishments actually respond to the survey. So it's more data. It's also more seasonal variation, so seasonal adjustments. So what you see that first month and what you see for the next two revisions could change a lot.
I'm wondering. Oh yeah, no, Sarah, please.
No, just a quick note on the revisions too, just to kind of reiterate the points. Like, I think one of the first things we look at, right, is the headline payrolls numbers. So let's say it's for August, you look at that. But then probably like the second or third thing I'm looking at is like, well, what do the revisions say? Because it just helps you characterize, is this an acceleration? Is this a slowdown from the previous couple of months? So it just, again, gets back to Reed's point about like, you should be looking at the trend.
I would be so curious to hear your take on the trends right now, because I feel like in the story of what's going on in our economy right now, jobs, unemployment has been sort of this beacon that it's the thing everyone points to when it's like, why are we not, are we in a recession or like, is the economy going downhill? It's always the jobs number that seems to like be our little light at the end of the tunnel. And I'm wondering, looking at the data now, having watched it evolve over the last few years, what do you think is happening right now, and why? What are you looking at in the data, and what stories is that data telling? Are that data telling?
I'll jump in here. I think that the jobs data has evolved a lot. I mean, to answer your question, let's just go back to March and April of 2020, when the US economy lost 20 million jobs in a 6-week period. That was all the net job created in the previous 10 years. So we were bound to see some changes. How I characterize the labor market right now is strong, but very fragmented. There are pockets of weakness within that overall strength. And those pockets, when we think about the jobs market, it's always about this cycle, this business cycle, whether or not we're going to head into recession for the next 6 months. But as an economist, if you take a step back, it's like, what is the jobs market saying about the next 10 years? And what it's saying is we have some issues in terms of labor shortages that are not going to be quickly resolved just by this cycle. So to me, it's about holding both what's happening in the short term, that's where the Fed comes in, they affect short-term movements in the economy, and what's happening longer term. Longer term, we can expect persistent labor shortages. That's just the reality of our population destiny in terms of aging and demographics. In the short term, you might see some softness in the labor market, but it's not likely to go down in terms of unemployment rate. Let me just put it this way. In the 2009 recessionary period, we stayed above 8% unemployment rate for 3 years. We're now at record lows. So even if the unemployment rate goes up a bit, we're still not even close to that 3-year period of really strong displacement. So yeah, strong labor market, yes, but there are so many pockets of that labor market that need to be filled with workers, and that we're still seeing some fragility. And that's, to me, the interesting part of the labor market, because that gets back to context and why is it happening.
I'm so interested in the fragmented comment, because I feel like, Sarah, you touched on this too, that like the different parts of the labor market are telling different stories. Whereas I think during the housing crisis, it was much more one big story of a much more traditional recession. And now it does. Would you mind kind of digging into, Sarah or Neela, just what the fragments are, like between service and hospitality versus tech versus like what the trends are you're seeing in different parts of the job market right now?
Sure, I can start. So I think, unfortunately, the BLS, the report doesn't actually define tech. So that's been like kind of a challenge for us over the past year or so, as we have seen tech layoffs and job postings, according to various different sources, in tech type roles have come down. But we've been using the information sector as kind of a proxy for tech, and we have seen some weakness there. I don't know exactly what happened last month, but there has definitely been some weakness in that part of the economy. But it's very small in terms of what it accounts for in the broader economy. Is probably just a few percent of overall jobs are in information. And so we've seen that. You've also seen some pullback, some slower hiring in jobs like finance, or if you dig down like deeper, real estate, you have seen that. And I think it's an open question and an interesting one, like how much of that is kind of just like a reset, because all of these sorts of companies were hiring so much in probably 2021 into 2022, early 2022. And so it's like kind of natural that they would tap the brakes on that, versus, oh my goodness, like we're heading for something like more serious. I think that's kind of been an open question about what's happening in those sectors that are slowing. And then just briefly on the what is growing, like I think what's happening in healthcare, when I was looking at the numbers a few months ago, you were seeing like basically an acceleration in hiring in that sector. And I think at least some of that is tied to, oh, we had like a lot of nurses leave, now they're coming back, etc. So it's sort of related to what happened earlier in the pandemic, but then it's also related to, you know, these long-term trends, the aging of the population. Okay, we're going to need a lot of healthcare workers to fill these jobs. So I think maybe that's what Neil was getting at to some extent. Like we will see a lot of hiring in healthcare, perhaps even if we like get into a recession, I think.
Yeah, Neela, are those some of the long-term trends that you're seeing when you step back and kind of look at what you were talking about, kind of like the 10-year trends? Like, is that what you're seeing, or what are you seeing?
Well, I agree with Sarah in terms of that healthcare and the care economy in general. We know how important the care economy is for women's workforce participation, how it was decimated by the pandemic. So that's always something to be watchful of. But also it's construction. Housing has been chronically undersupplied. Affordable housing is more and more scarce, especially located with jobs. So construction is so very important, and yet you don't see young people going into the skilled trades, plumber, electrician. Anyone who's tried to get one recently has had to wait and pay a lot. I know a plumber came to my house once and left with $1,000 in 10 minutes. I didn't even realize that was possible, but it was possible. It was sad. But anyway,
plumber that much, or just like, I will pay you what you need.
Yeah. Well, when it comes to plumbing, you have very few options. but yes, that's an issue about the fragmentation of the workforce and where the skills are needing. So we talk about labor shortages. I talked about labor shortages, but a lot of this is skill shortages. And so that points to all kinds of different policy issues, not just for the government, but for companies like mine. It's like, how do you solve some of these skill shortages, whether it's in accounting? That's a place where we've seen fragmentation, young people not going in, or like skilled trades. So it's a big issue.
And Reed, I'd love to hear from you if there's any trend you're seeing, any story you're following, any data that's like a puzzle to you, or that you're watching that is maybe telling the story of this moment.
I think that's a great question. Well, over the course of time, following labor force participation, particularly among women, has definitely been something that I've kept a keen eye on. But in terms of the moment now, I think wages has really become a key issue. I mean, for most of America, the inflation was rising faster than folks' wages for a long time, and we just now, using kind of year-over-year metrics, we finally got to a level where wages adjusted for inflation are slightly positive from a year ago. And so for me, watching that story play out and whether you can continue to see some wage increases as we move forward if inflation's going down, because it's also turned out to be kind of a key talking point for the Federal Reserve as well, which obviously has broader implications for where the jobs market heads as well.
Absolutely. I just to add on to Reed's great point, I think of wages as the bridge between the jobs market and the inflation numbers. And as a payroll company at ADP, like wages that's what we do. We pay people. So we keep track of wages. And I think what we've seen here in terms of service inflation, it harkens back directly to the jobs market, to labor shortages. So when early on, when inflation was peaking up to 9%. A reporter asked me, okay, so is inflation data now more important to than jobs market data in terms of the health of the economy? And I responded, it's always about jobs. No matter what you're talking about in the economy, it's always about the jobs. And I still believe this, that the jobs market is the single best, that cluster of data tied to the labor market is the single best cluster of data that we have on the state of the US economy. And it affects everything. So it really should be the highlight here. And it's really important for the inflation picture as well.
Why do you say oh, sorry, go ahead.
I was just going to say one quick plug on ADP's report that comes out a couple days before the the BLS report is that they actually break up pay into job stayers versus job switchers, which I think for me is really helpful to kind of see the differences there. So it's worth checking out as well.
Yes, and I did want to ask about it's all about the jobs, because certainly we're in a situation now where, the Federal Reserve has two, it's not like you have one job, they have two jobs, which is, taking care of unemployment and keeping prices low. And I'm curious why jobs, Neela, to you seem like the most, like it's all about the jobs, because I think there is some tension there. And I'd also be really curious, Sarah and Reed, to hear from you if you think it's all about the jobs or if it's all about the prices.
Yeah, as an indicator of the health of the US economy, absolutely. So the jobs market is the thing that connects at these various sectors. So you think about the interest rate sectors versus the tech sectors. All of this is played out in this humongous jobs market where there's can be lots of turnover and change. When you think about small firms, we don't talk a lot about small firms, about Main Street mom and pops, but they create 2/3 of the net new jobs. And if you have, a healthy Main Street, that's small businesses, that's workers, and that's consumers, that underlies your economy. And so with consumer spending being 70% of economic growth, most of us are not, I know I'll speak to myself, I have to work to get money. Some people don't, it just comes in the form of a trust fund or something, but most consumers are also workers. And so those jobs are really important for consumer spending, which is the bulk of economic growth. So I always go back to jobs in terms of really the number one indicator of whether the economy is doing well. And with 3.7% unemployment, it's hard to argue that this economy doesn't have some steam ahead of it. It's not, gasping its last breath yet.
We actually have a question kind of related to that from Amy Berg. She asks, how does the US government define unemployment these days? Where do gig workers and freelancers fit in? And are specific white collar industries like journalism tracked? Someone want to jump in on that? Well, we can maybe break. Oh, yes, go ahead, Neela.
Reed was also coming off mic too, but I'll just say that it's really hard to track gig workers. I know there's attempts. It takes more funding, unfortunately, than many we have at our disposal. I think this is a fertile place of opportunity to understand the gig worker environment better than we do. It's not that it doesn't ever show up in the data, it's just harder to track. So this is a place where, as more people are doing more informal work or gig work, even if it's not informal, it's a great place to measure.
And Reed, I remember you saying earlier in our discussion that one of the things you'd like to look at is hours worked, or hours worked because of the economy, and some people working fewer hours than they would like. Is that where you find gig workers, or is that part of what that covers or not?
So it wouldn't be in that case, because the hours are based on that survey of businesses, and so it's not inclusive of self-employed workers in that case. But to answer the unemployment question real quick, this is kind of one of the main reasons I have a bone to pick when people say kind of the joblessness rate, and it's because the definition of unemployment by BLS means that you are looking for work and that you do not have a job. And there are a lot of people who are not counted as in the labor force or counted in that unemployment bucket because they're unable to look for a job at the moment, or they're discouraged from looking. So when we think about using the unemployment rate as kind of a measure, it's important.
Hey, can you guys hear me? My sound is being a little wonky. Okay, that's good. That's really interesting to me. I remember once an economist described it to me as like a dance, where there are like people on the dance floor, and some of them have dance partners and some of them don't. But then there are the people who are like waiting, like the wallflowers. and that those are the people who are not like actually counted in. And I think, I mean, what has happened with that group? What have we seen happen with that group in this like kind of latest in the last few years, I guess?
I'll take a crack at that because I don't think there's a lot of data on the people on the sidelines. I would love to see more. I'd like to hear more about what gets them back in the labor market. We looked at wages, right? Wages should have done it. If anything is gonna, wages is like the stud in the middle of the dance floor, the gorgeous gal who, asks you to dance and you say, no, that's okay, I'll just stay here. Wages didn't lure workers in the same way it had historically. That was a real surprise. I think inflation had a lot to do with that. It's still not worth it in terms of the average worker for a very long time until, as Reed mentioned, it's barely treading water in terms of real wages. But I think there is a lot to be gleaned in terms of why there was such a resistance to come back to the labor market. We know some of the aid programs also made it possible for workers to stay out longer. But what really pulls workers back now, I think, is the question. What are the jobs that are being offered now? And that could go back to the skill set question. If everybody is on the floor breakdancing and all you know how to do is foxtrot, you're gonna, you might be a little wary getting back into these labor markets. Terrible analogy, Stacey, sorry. But, making sure that those people on the sidelines have the opportunities. Just because there's a lot of great job postings doesn't mean that you qualify for any of them. And I think that skills issue is a big one in terms of not only where the labor market is now, but we know that there's all these technological innovations that are on the horizon. And my concern is all these sideline workers who are out of the labor market anyway, who are losing ground already in terms of what's happening in the workplace, might fall even further behind in terms of their skill sets and development, making it even more of a challenge to get back into the labor market.
Right. I mean, I remember once learning a few years ago, maybe it was after the housing crisis, but I remember the idea that sometimes when the unemployment rate goes up, it's a good sign in the economy because it means people are coming in, they're starting to look again, they're starting to feel like maybe there's something out there for them, and that can actually be kind of a good sign. I'm wondering what you all are looking at now, specifically maybe what some of the bright spots are that make you feel optimistic about where the economy is headed, and maybe some of the concerns that you're watching. I'd love to hear that because I do feel like it is a very confusing time. I feel like the economic data is not telling a clear story, and all kinds of people are disagreeing on what's going on. So I would love to hear what you think is going on, I guess through the lens of the jobs report. And Sarah, maybe we can hear from you first.
Sure. I think overall, my takeaway is the jobs reports that we've seen this year have been honestly surprisingly strong. I think it was back in January, February. It was like 500,000 jobs were added on net in a month. And that is just, when I think back to when I was covering this report in 2019, which was a very good labor market, anything over like 200,000 in a given month was considered very good. So we're talking 500,000 at a time when a lot of economists were talking about we're going to head into a recession in the next couple of months. So I think it's been surprisingly strong overall. There are pockets of weakness, like Neela mentioned, and I think that even we watch another report called the jobless claims report, and that it comes out every single Thursday, and that's really helpful because it's timely. But sometimes we get sort of mixed signals from that, but that has been trending upwards, which is a sign that layoffs could be trending upwards gradually, I think. And so at this point, I'm just kind of taking it week by week report by report. We'll see what we get. I think the next jobs report is next Friday, sometime after July 4th. And yeah, overall though, I would say that the job market has been very strong with some underlying signs of weakness, and surely it is a cooler market than we had, a year or so ago.
Sorry, I'm muted. One of these days I will actually learn how to use Zoom. That is apparently not today. But if you have a question, drop it in the chat. And yeah, anything about the jobs report, we're happy to try to tackle it. Reed, I'm also curious to hear your silver lining points of concern about the numbers that we've been seeing lately.
Yeah, so earlier I touched on kind of the things that I'm watching in terms of looking for points of concern, but like Sarah said, I mean, the story of the jobs market over the last year has really been one of silver linings, frankly. It's surprised economists time and time again on how resilient and strong it's been. It's, forced economists to have to shift the goalposts for when they think that, the US may fall into a recession, or if it even falls into a recession at all after these interest rate increases. And so in terms of looking at the things that, make me happy to see are kind of the fact that the unemployment rate for a lot of different groups has really come down, and and kind of in the good way that you were discussing in terms of more participation. So when we look at, for instance, a group that, economists perhaps a little unfairly call prime age workers, which is 25 to 54 years old, you've seen, the participation rate for that group really rebound to levels that we haven't seen since kind of the early 2000s, the early 2000s. And for women, you've seen in that age group, you've seen that recovery as well. And that was obviously a really big story at the beginning of the pandemic, as childcare and elder care kept a lot of women, forced a lot of women to leave their jobs or to drop out of the labor force entirely. And then, in terms of thinking about other things, it's good to see that the jobs market is still adding as many jobs, as Sarah said. I mean, the kind of numbers that we've been seeing, yes, they're not as massive as they were when the economy was rebuilding itself right after the pandemic-driven losses, but the strength has been surprising time and time again. And I think it's something like the last dozen or so reports, the payrolls number has come in higher than the median estimate of economists. Don't quote me on that exact number, but it's been a ton. And so I think just seeing that every time is, we use the phrase happy jobs day. And for the most part, for a while now, it's been a happy jobs day, not a sad one.
And Neela, what about you? I'm especially interested because I know you're kind of looking at these reports with sort of a longer term perspective, as well as the more immediate. What are some of the silver linings, and what are some things that maybe concern you?
Yeah, I think I'll just harken back to my comment on wages. I really think keeping an eye on that ball is really important. I remember the 10 years leading up to the pandemic, and the narrative we got from the Fed is that we could keep interest rates near rock bottom because it wasn't stoking up inflation. And the reason why we had that expansion, the longest in US history, was because it was so slow. I mean, tortoise-like growth, wages that barely kept up with it. It wasn't like the glory days were before the pandemic. The glory days, workers were pretty much just keeping up with inflation. Wages were growing so slowly. And so what I'm looking at in terms of this jobs market is where the wage gains are falling. We talk about them in the jobs report as macro, but we know that wages grow at all different speeds. There's the race cars, and then there's the Sunday drivers and everything in between. And where we've seen the biggest wage growth for this last 3 years is in that service sector jobs, those low pay jobs, young people who make less. That's where we've seen double-digit wage growth. And so there's this whole research question on whether the competitive landscape for low-skilled workers has changed. I don't know if it's changed. I don't know if this is just an aberration of a labor shortage, or we're really looking at wage compression, where low-skilled workers are actually in the driver's seat or closer to the driver's seat than they have been before, that they are in a competitive position because their skills are so needed. I think that is both an opportunity and a risk. Because if we go back to where we were with low skilled work, treading water and not keeping up with inflation like we were in those last 10 years, what does that mean for the growth that we're seeing in the economy now? So I think that even though the jobs numbers are strong, like you couldn't dream, some of these reports are so idyllic, it's like perfection. But if you start peeling them back in terms of those trends and who's gaining, that's important. And just one thing, I know this is unfair, Stacy, because it's not specifically in the jobs report, but it is part of that cluster of data I look at. And I'm sure
bring it all in.
and Reed also look at it. It's workforce productivity, output per worker, which has declined year over year in terms of growth for the past 5 quarters. Never seen that before in the history of the index, going back to I think the late 1940s. So with all this talk about innovation, why aren't we getting more productive? Why are people growing the number of hours they work, but reducing the number of output? And I think that starts with the jobs market, the jobs that are being created, but it translates to productivity as well. So that's something I'm hugely concerned with, and it really is the long-term solution to inflation. When people can work less and produce more, well, that's just more Netflix and chill time for all of us.
Yes, I think, was it the economist John Maynard Keynes had a dream of a 15-hour work week, that automation would be doing so much for us that we could just work 15 hours, which sounds so great. And I don't know how we've never gotten there. We do have a listener question from someone who does cover a lot of leisure and hospitality. So I'll just go ahead and read it. This is from Lisa, and Lisa writes, you all mentioned that hospitality jobs led the recovery. In my beat area, which has a strong tourism economy, leisure and hospitality has lagged and is just recovered, where manufacturing here led the recovery. And then also any thoughts on covering jobs from essentially MSA level? Anyone want to jump in there maybe and explain, like, are we seeing pockets of the country where manufacturing kind of led the charge? And
yeah, I think that's absolutely true. It is supported by consumer spending trends. Like during the pandemic, we all started spending money on goods instead of services. If you think about where the hit was in terms of the pandemic, it was for service sector jobs. Tourism, no one was going anywhere and people started ordering stuff. So there was this like pandemic economy fueled by tech and warehouse and delivery drivers and people buying stuff. Since that time, there has been more of consumer spending dollars going into services. And so that's ramped up tourism and employment. But, there are some sectors that were barely touched by the pandemic. Finance, for example, hardly any job loss. Information tech in the initial stages, hardly any job loss, but really leisure and hospitality, huge hit. And so it took a while to get those jobs back. Those are also low pay sectors, so it was harder to lure people back in. So I think that is about the fragmentation that we're seeing. And of course, location matters. We don't really get into geography all that much, but it does vary from area to area.
I think just to hop in there, yes, when we're talking about that hospitality jobs were, kind of leading the recovery, we're talking about the actual number to Neela's point in terms of adding each month because they lost so many. But you're totally right. If you look at a national level of total payrolls for leisure and hospitality, it actually hasn't caught up to pre-pandemic levels yet. So we're still kind of watching that recovery in process. And then in terms of covering jobs from the MSA level, we actually got that data today. The release came out from the BLS, so good timing. I think one thing to keep in mind with that is, at least on that report, it's not seasonally adjusted. So when we think about using data on a month-to-month basis. So the numbers that we're talking about for the national jobs report are what we call seasonally adjusted. And that means that you can compare one month to the next, because in any given month, there might be, a usual swing we're used to. So you hire holiday workers, then you lay off holiday workers, you hire people for summer, then you lay off the people from the summer. And so essentially the BLS works to try to smooth those things over. So my only kind of suggestion in terms of working with MSA data is just to keep an eye on when you're looking at non-seasonally adjusted versus seasonally adjusted data, because it's much easier and probably more accurate to look year over year. So to compare the same month to the prior year when it's non-seasonally adjusted. One other thing that I'd suggest looking at for local data, BLS has this awesome database called QCEW. And it allows you to go all the way to the county level for a lot of statistics. And so sometimes when you're trying to get a local picture, it's delayed quite a bit. But if you're trying to look at the historical picture or get a sense of what people are paid in that area, for instance, it can be a really good thing to look at too.
Oh, that's a good tip. I wrote that down. We have a question from Lisa who asks, can someone briefly explain what are Bidenomics and whether that will actually work? Of course, one of the beautiful things about jobs data is it's not political, but politics, inevitably, it's probably one of the most important data points when politicians are roving around and doing their stump speeches. So does anyone want to tackle Bidenomics and what that actually means and how that maybe relates to unemployment and jobs?
I can take a stab at this.
Do it. I appreciate that.
So my understanding of Bidenomics is essentially kind of a phrase that the White House has put on the general kind of set of economic policies that they've passed over Biden's term so far, with the idea of basically being the opposite of the trickle-down economics that people are used to talking about, with the idea that you build from the bottom up and the middle out is the general idea. So in terms of thinking about what those pieces are, we have the American Rescue Plan, which was that $1.9 trillion stimulus package that was passed in March of 2021. And then you've seen kind of these bigger long-term projects. So the Bipartisan Infrastructure Act, the CHIPS and Science Act, the so-called Inflation Reduction Act. And I say so-called because it doesn't have a lot to do with inflation in terms of what's actually in that bill. But I think, from the White House's perspective, you can think about that American Rescue Plan as being part of the broader government stimulus packages passed over the broader government support packages that were passed over the course of the pandemic, and really have helped supercharge the economy and the labor market to where it is today. But in terms of the other policies, they're really focused more on longer term growth. It's about, making the US more competitive, nearshoring and bringing manufacturing jobs back to the United States, seeing kind of an expansion of electric vehicles, that type of thing. And, from seeing that actually show up in economic data, it will likely take a bit longer to see that in terms of years, in terms of kind of seeing the full spread of how many jobs might be created or what the actual full economic impact may be there. But similar to what Stacy said, the economy is inherently both, these data are not political in of themselves, but no matter the report, no matter who is in office, there will be kind of an emphasis on picking out what might be the things that most support that person in office.
Yeah, and I have to say that is one of, I think, the things that I am the most grateful for in our country and economy, which is, is that data is always reliable. It's collected so diligently, so carefully, and it's no matter who's in office, it doesn't really make a difference to the data, which is not the case in many countries, and it's just so helpful. Yes, so I don't know if anyone else wants to weigh in on Bidenomics or or kind of the question or how it's affected the economy or jobs. There is a more technical question from Antoinette that I did want to ask, which is, do you know of any tracking of participation or completion for skills and training programs like private or public grants or obtaining a CDL or nursing programs? Is there something that tracks that? I feel, Neela, like this kind of relates back to your point of like skills, things that our economy is going to be needing and things like that. Is there anyone that tracks these programs?
I wouldn't know the universe of how certifications are tracked. I know that, what ONET does for the BLS is classify jobs by level of skills, ONET. So jobs needing no high school all the way up to requiring a PhD. But how granular that data gets, I'm not sure that I know what that looks like. But I think it's a great point. It would be great to know, especially when it comes to certifications in the healthcare field, because we know that every state has their own certification requirements. So when you're talking about growing an economy or growing in places in an industry that is sorely needed, and that growth may not look like we need more people in San Francisco. It might mean we need more people in rural and in Indiana. So having that kind of granularity on certifications and where the certification hotspots and deserts are, I think would be hugely important at a local and a national level. So maybe if we put it out there into the universe, someone will
manifest
manifest that data, because I'd love to see it.
So we're getting to the end of our hour. This has been really wonderful. I would love to give you all just a moment for some final thoughts or things that you're watching going forward. Sarah, I wondered if we might start with you. Just any final thoughts, anything coming into your head, or sort of what you're looking for going forward?
Yes. Well, I know this is about the jobs report, but I just wanted to note that I don't think any of us economists, journalists, we don't think of like the job market as just totally being told in that report, right? Like there are questions that it doesn't answer, like job quality, for instance. And also a lot of my best story ideas, well, I would say it's divided. Some of them come from the jobs report, but a lot of them come from real life. I'm just thinking of a quick example of back in early 2021, when the economy was really starting to fully reopen. I remember going to a Thai restaurant, and the waitress there was just like, we don't have enough people. And so we waited like 90 minutes, right, to get our meal. And that was probably back in March. And then I think it was April or a month or two later, we saw in the jobs report like signs of labor shortages, right? But like seeing that in real life kind of gave me like an early look into things that the jobs report didn't reveal until later. And I think that that's just been true time and time again. Like talking to workers and business owners can give you complementary or early insights into what the jobs report shows.
Yes. I mean, we're all in it. That's one of my favorite things about the jobs report, right? It's like, it's all around us. We're in it. You see parts of it. And I think sometimes with economic data, it can seem very abstract, but the jobs data is very like living, breathing people's jobs and livelihoods and waiting 90 minutes for Thai food and all of it. Reed, I would love any final thoughts or just anything coming into your head about jobs data, jobs report, what you're watching.
So absolutely, I'd echo Sarah, this is one piece of a broader puzzle of the labor market. And so you definitely want to look at multiple different things. And, the jobs report can both be a place to look for story ideas, but also to kind of give that punchy data point to something you might be seeing in real life. But two just general tips with it. One, read the release. I know that sounds kind of silly, but BLS sometimes adds new things. They flag all different kinds of things in that PDF. If you just kind of read it, that's a very helpful place to start. And secondly, I'd remind people to remember that this is a mid-month snapshot. So we talk about this as, for instance, the report coming out next week will be the June report, but effectively it's the change between mid-May and mid-June. So when you're trying to look for trends that might have popped up at the end of the month, like let's say there was a natural disaster and you're looking to see if that's going to show up, remembering the time period that we're talking about can also help guide your reporting.
Excellent. And Neela, any final thoughts or anything coming into your head about the jobs report before we let you get back to today?
I see we're at time, so I'll keep my comments brief, but I think it's really important, again, to look at the trend. And we've talked a lot about seasonally adjusted numbers. I think that's a really important note because we've seen huge swings in the job market over the last 3 years. And seasonal adjustments, these patterns that appear every month in the data, it's based on historical trends. But that 3-year period has thrown those historical trends totally out of whack. And so the BLS, the smart folks there, they try to adjust for that. But this is an issue not just with the jobs data, it's with every macro series that you encounter. So as great as the data is, it's our best available, it's always wise to have a degree of caution in going all in on the first print of any report. I know we want to get everything out quickly, but it's worth looking at the revisions and being cautious about seasonal adjustments, especially when you see large swings in the data.
Well, that feels like a beautiful place to end our discussion. Sarah, Reed, and Neela, thank you so much. This was fascinating. I loved hearing about your process and your smart insights. I just want to let everyone know for future webinars, you can go to cebu.org. And I just really want to thank everybody for your great questions and the panelists for your wonderful insights. And happy almost Jobs Day next week.
Thank you.
Happy